February 15th, day after Valentine's Day, and I have a little presentation I made about where Bitcoin is, right now. Let's just make sure that we're all recording and everything. It's about a 10-minute presentation. It won't take too long. Okay, it does look like I'm recording. Okay, good. All right, so it'll be available on YouTube and Facebook as well. Okay, let me get my presentation here. Here we go. All right. Let me change the view here to here. Okay, so we haven't done one of these in a while. Hello, Pink. And we're on Bitcoin. We're at 15th of February. And let's take a look at kind of what we got here. Just bear with me just 1 second while I kind of set everything up. Okay. All right. So I really think that, Bitcoin remains the best place to park your money. And that's going to be the theme of this, but I'm going to sort of ordinal tweets. Hey guys, I'm going to go over why I think this is actually more the case now, even than it has been for a while. Let's just take stock of the situation. As of right now, Bitcoin is down 46% from its October 6th all-time high of 126,000. It's been a brutal 4 months. It's not been fun. I did think it was going to sort of stop at around down 30%. So the last 20% have been unexpected for me. And many are saying this proves this 4-year cycle. They're like, look, Fred, it looks like a 4-year cycle, et cetera, et cetera. So even though the same people are saying halvings are no longer relevant, which is interesting. So we have to ask ourselves, are we kind of in this world where we're forced to endlessly repeat a 4-year cycle? Is this something we're doomed to do? And why would this idea of these cycles be so unique to Bitcoin? We don't have 4-year cycles in gold or stocks or anything else, real estate. Why is this thing so entrenched? And I think there's one reason. The reason is Plan B. That's the reason. And in March 2019, an anonymous Dutch account called Plan B came up with this model called stock to flow. And I think it's worth going over this model. So it started with this very general idea that Bitcoin's value is in terms of scarcity, right? So, we all bought Bitcoin because it has 21 million coins. We all sort of like this idea of scarcity. And I think that's why this thing resonated so much. Well, if you look at stock to flow, there's a certain amount of stock that is Bitcoin that's in circulation. There's a certain amount of new flow of Bitcoin that's being entered into circulation. Same is true for gold, for silver, for other assets too. And with Bitcoin, of course, every 4 years, the flow of Bitcoin is halved, right? And that's just why it is written in the chain. And so the reverse of that, which is the stock of flow, Bitcoin divided by the flow, doubles every 4 years, right? So you have a doubling of the stock to flow every 4 years. Now, a lot of people have said, well, every 4 years, the price goes up 10x. anyways, it's just sort of a random thing. You see it, it's a meme almost, like add another zero every 4 years. But basically this stock to flow model said, okay, let's use this stock to flow as the variable and let's regress around it, right? So let's regress specifically the logarithm of price to the logarithm of stock to flow. That was the idea, right? And so if you do that, you find that there, at least if you did that back in March of 2019, you'd find that there was a 95% correlation, which you look at that and you go, oh my God, that's incredible. And the stock to flow enthusiast said, QED, quid erat demonstratum, means, and thus ends the demonstration, which is what you do in math proofs. At the end of every math proof, you say QED. And so a lot of people just stop there and they're like, okay, this proves it, including, for example, Saifedean Ammous, who said, this proves it. He's like, clearly the stock to flow model proves it. So he was wrong. But I'd say, hold on, hold on. There is a statistical crime being committed here. And let's examine this stuff a little bit more carefully to understand what's happening. Now, if you look at the stock to flow, right, that's a deterministic feature of Bitcoin, right? There's nothing, that thing does not change like price. It's a step function, right? Every 4 years, it doubles. And because it's just a step function of time, it is obviously highly correlated to time. And the power law, which is a sort of valid statistical analysis, says the log of price is a linear relationship with the log of time. It is a 5.8 coefficient on the log of time plus an additive factor in log space, right? But if the log of price is proportional to the log of time, then you would expect the and stock to flow is a function of time. You would expect there to be a high correlation. It should not surprise you then, therefore, that if this power law holds, that the log of price should be somewhat correlated to the log of stock to flow. And that's exactly what Plan B, discovered. At least over small time ranges, right? Now, you can get into trouble with these kind of things, and Plan B did. In particular, this is the equation that Plan B wrote in the stock to flow, and we see a 3.36 multiple, right, in log space. This 1.84 does not matter, right? The only thing that matters is this 3.36 multiple, and basically says the price is basically 3x the log of the stock to flow. That's basically what it says, right? Now, the problem with that is that if you project that out to today, you'll get that it's 600K would be the trend line. So, we're pretty far off from that, right? That would be the trend line, right? So, not the bubble, but the actual trend line would be 600K. So, we're 7x away from that right now. I would say that'd be a failure of the model. So I'd say actually the stock to flow model has failed in every single sense. And that's this slide. The model has failed. The model's failed for a couple reasons. One is it's entirely running on the power law model, that all of its statistical validity comes from the power law model. And it's just an incorrect model, right? Now, Plan B, on the other hand, has not failed. He has 2.2 million followers. That's an enormous amount of followers, right? Oh, we can't hear you. That's a problem. Is that right? Can you not hear me? Let me just check. I'm going to check. Some people may be able to hear me, other people not. Let me just check. I'm going to check my microphone here. Excuse me while I check my mic. Audio. US 2x2. Yeah, it does seem like it works. I'm going to say it works. I don't know. Volume up. Okay. I can hear you. Okay, good. All right. So Plan B has 2.2 million followers, right? That's a lot. In fact, it is more than everybody else in Bitcoin except for Michael Saylor. It's literally a third of what Michael Saylor has. I think he has about 6 million at this point. But the next highest account is Bitcoin Archive, Archie. So, I have 200,000 followers. A lot of people, there's about 30 people in the sort of 200 to 600,000, 700,000 followers. But Plan B managed to, with this narrative, get the second most followers of anybody in Bitcoin. So that's pretty significant. So I think you have to believe that the 4-year cycle really runs deep. It runs deep. And in particular, OGs believe. Many of them sold at 100K. And that's a lot of these OGs, they're not necessarily mathematicians. They don't really understand the statistical stuff of what's going on. All they know is it was, it at $1,000 in 2013 and 2016. And, now we're at 100K. That's 100X where it was in 2016, 100X. Take your money off the table. And so a lot of them did take their money off the table, right? And really, I think if you look at 2025, it was a tug of war between OG selling and ETF buying, right? Culminating in mass liquidation on October 10th. Thin markets, forced hedge fund selling, right? So that's one of the things we saw on February 5th. We saw a lot of, we think, a hedge fund that blew up that had a ton of IBIT and a ton of software exposure through software as a service stocks. And yes, Cortic, 210,000 blocks, of course. But yeah, that's more or less 4 years though, right? And I dispute that is even in play. In 2022, we hit 77% down, right? So, that was the number. It was just 15,000 and change. Went from 69,000 to 15,000 and change. And that would be equivalent to Bitcoin 30,000 today, so that's where that's coming from. And obviously 30,000 Bitcoin is pretty scary. Another way to look at it is just through the previous bull market high, right? So if you look at, almost all of 2017 was below 10,000 actually, right? And then it just spiked up to almost 20,000 in November of 2017, right? But it was just a real spike. And so if you look at the 15,000 thing, it's pretty much at the previous bull market all-time high, right? So that was very scary. But I would argue there are major differences now with this last bull market from 23, 24 to the previous one. In 2021, we hit 3x the power law trend. And that showed up as exuberance in all different aspects, right? We fell from a much higher level of euphoria than we were in 2025. In 2025, we only hit 1.2 times the power law, which again, I just remind people, this is the statistical model that best fits the data right now. So you could say you don't believe in it, but if you believe in statistics, that is the best model that fits the statistical data of Bitcoin from 2010 till now. That is the best statistical fit is the power law. And we only hit 1.2 times trend in 2025. And most importantly, I'd say maybe even more importantly, the broader alt market never participated, right? So Anthony Scaramucci said in particular that we've been in a bear market for crypto, not Bitcoin, since January of 2025. So it's been a year, right? So OGs didn't sort of just finally sell in October. They've been selling all year long. If you look at the Checkmate on chain, check on chain stuff from Checkmatey, you'll see that they've been selling all year long, right? And so where are we now? We're already through the 2021 market highs. So we didn't go up anywhere near as much as before. We're already through the 2021 market highs, which were 69,000. We're currently below it right now today. OGs have sold, they aren't selling at 69,000. They sold at 100,000. They're no longer selling. Actually, they are net buying right now. Okay, that's what the data suggests. So I would argue, and Tom Lee is arguing, and a bunch of other people are arguing, Checkmate as well, that we are close to or at a bottom. And I would also argue that if you didn't sell, you didn't miss much, at least if you're in California. And what do I mean by that? I mean that, and I've said this before, that your effective tax rate as a California citizen is 37%. Same, it's actually even a little higher if you're a New York resident, right? So unless you sold above 110K and bought back in at 70K, you're actually going to have, with your tax liability, you will have less Bitcoin if you did that than if you just hodled through, if indeed we were at a bottom. Okay, so I suspect that actually the people who did, very few people actually will end up with more Bitcoin as a result of timing the top and buying below. Most will end up with less Bitcoin as a result. Obviously, if you're in a tax-free jurisdiction, that's not true, but there are very, very few of us who are in complete tax-free jurisdictions. And it can even be worse if you haven't held for less than a year. Now, given where we are at 40% under the trend line of power law, we are likely to 2x this year just based on trend, recovering to the trend. That's an amazing result, right? Now, if we don't 2x, if we kind of recoup this thing over a couple of years, which I don't think we will, I think it'll be quick. There's still massive tailwinds that we have. So, we have massive tailwinds. We have, in particular, a new Fed chair. We spent a lot of the 2022 bear market can be attributed to Powell tightening interest rates. That is one of the biggest problems we had with 2022. Powell said we're going to be lower for longer, and then he completely changed his mind, aggressively ramped interest rates. And we had the highest rate of increase of interest rates that we've ever seen in the history of America, from 0 to 5.5%. Now we're at 3.5%, and we're headed down in June, right? And by the way, the consensus right now is that we will be at 3% by September. That is the Mercantile Exchange consensus. You can check it out yourself using the FedWatch tool. So whether we get to 2.5%, 2%, 1%, I don't know, but we're definitely headed, rates are definitely headed down. You can take that to the bank. Furthermore, there is a pressure to win the midterms. And so Trump is already floating the idea of taking some of this tariff money and just handing it to people in terms of stimulus checks, or handing it to people in terms of tax refunds or whatnot, right? But there's just enormous pressure to win the midterms. And that starts now, right? We have to start now. They pulled away from the Minneapolis ICE stuff. Job number one right now is winning the midterms. Debt is hitting 30, will hit 39 trillion in March. We're at 38.65 trillion right now. The budget office released a stat saying that the deficits are going to be worse than ever. In spite of Trump saying that he's going to fix the deficits, they're worse than ever. The tariffs didn't even help. Our deficits are just going out of control. So, the printer cometh, okay? The printer cometh. As Dominic Frisby said, the AI shock is coming, and so is the printing. I think that is, I think that's an amazing statement. Let's just time out here. We all know AI is coming for white collar jobs. It is an incremental thing. It's not going to hit all at once, but it's starting, and it is impacting growth. Amazon has sort of said, we can grow now without any more humans. We're not going to fire any more people, but we aren't going to hire any more either. We're only going to hire AI at this point. So we have a problem with employment. Employment is weak. Companies are just now realizing how they can harness this AI. Generally, people are just starting to figure this stuff out. Ben and I were early. We've been fully on this for a year now, but a lot of people are just now buying their Mac Minis and saying, holy shit, this stuff's amazing. Claude Code is amazing. Yeah. I don't want to say I told you so, but I told you so. Now, from this level, Bitcoin has the power to deliver 50% plus CAGRs for multiple years, right? So the power law curves sort of running at a 38, 39% CAGR right now, but we're 40% below the curve, right? So even just catching up 20% for a couple of years will bring us to 60% CAGR for multiple years. So we have 50% CAGR rate is a very good, very safe assumption from here, right? 50% CAGR. Now, the stocks, where are you going to put your money? You're going to put it in stocks? Is that where you're going to get your 50% CAGR? Trailing PE on stocks is 30. Okay. The Shiller PE, which takes a sort of an average of the last 4 years of trailing PE, is at a 39 rate. And let me just show you this one graph to show you where that is. Okay. So that's where you're putting your money at in terms of the Shiller PE. And notice we're basically almost at the 2000 level, and we're above the 1929 level, right? So we're at massive inflated PE ratios for stocks. Not without risk, I would say. Not without risk. No, you're headed into an environment where, potentially these things can go higher with interest rates going lower. So I wouldn't want to short stocks, but I would argue that stocks are dangerous, okay? And I would also argue that gold is dangerous, especially relative to Bitcoin, because Bitcoin has been in a power law with gold. And again, there's massive fundamental reasons why it should be in a power law with gold, right? It is a new thing. There's adoption. It's portable. It's fit for purpose for the digital economy. So the idea of putting your money in stocks or gold, yeah, they look great in retrospect. Yeah. I mean, look at it since 2010. It looks great. We've gone from, a 15 PE to a 39 PE. Great. What if we're at one of these tops, right? You're going to have PE compression. Now, you might have earnings expansion, but PE compression could really be a killer. So I would argue stocks don't look that great from an asset class perspective. And so the last thing I'll say is, again, I've sort of mentioned how brutal it's been, how it looks terrible, but how you really couldn't have avoided it even by selling at 110K in general, because if you've been holding it for a long time, like a lot of us have, that's not a tax efficient way to go. And I would say you really want to buy when people are fearful. That's what Buffett said. And, this is where we are now. The fear greed index hit 5. That was the all-time low. It hit 5 2 weeks ago. Okay. Remember that Terra Luna event was a 6 and FTX was an 8. So, yeah, that's my presentation. I hope you enjoyed it. Let me just kill this and sort of look at some of the questions here. Why not just one swift cut to one rates? Yeah, I mean, one swift cut is possible. I think anything over 50 basis points could spook the market. So I don't think that we're going to go more than 50. I think, if you did 100 basis point cut, it might be terrible. Okay. I apologize if some of you don't get the audio. I don't understand exactly where we are with the audio, but I will try to next time. I'll check the audio on this thing and we'll see. But that's kind of my presentation. I thought it was going to be 10 minutes. It ended up being 27 minutes. But yeah, I'd say stay the course. If you haven't bought in, buy Bitcoin right now. I think the S&P 500 will tank. I'm not so sure, but I will leave you with this and talk to you guys later on Spaces. AOC will come in with a printer. Maybe AOC will come in with a printer, right? I think I ran a poll as to whether Bitcoin would be higher under Kamala or Trump. And the majority of my respondents, which was in the thousands, said that Bitcoin would be higher under Kamala. So, yeah.